Good afternoon and welcome to BizTech's Asian Midday Market Watch, powered by Austral Asset Management. It's the 13th of February, and our guest today is Vishnu Varathan. As always, every Monday, he's Head of Economics and Strategy at Mizuho Bank, coming out of Singapore. Now, Vishnu, as always, lovely to have you on the show.
My pleasure as always, Brian. Great way to start the week, and certainly the best way to get a soft start to the Valentine's Day, I suppose.
Yes. Now, speaking of Valentine's Day, I'm going to ask you because Singapore's budget is due on Valentine's Day tomorrow. And they've just released the GDP numbers for Singapore, where Singapore grew by 3.6% in 2022, down from 8.9% in 2021. What are your thoughts on this, and what are the market expectations on Singapore's budget tomorrow?
Yeah, I mean that's really one of the things. I think the budget is going to be in equal parts a case of show me the money and show me some love. You're going to get the budget probably shifting into a surplus sooner because I think revenues probably have surprised the upside. And that's out of a good story of demand recovery being better from the reopening was sooner, was stronger. You also have got a good housing market that lent to some of the stamp duty collections as well as general activity pickup. That theme will probably likely stay in place with a higher revenue base, and that's going to lift the surplus a little bit more. Also ties in with the 5 year of trying to have a balanced budget, with the first few years being COVID budgets that went into deficit. But equally, I think there will be a lot of support. One aspect of it is going to be for households because of the 1 percentage point GST hike. So the government will probably, have very targeted subsidies, means tested to be more generous for lower income households as it ought to be. There's also another aspect of support for the economy, and we see that coming through in terms of the support for the SMEs. I mean, the GDP data that you alluded to showed essentially a sharper manufacturing downturn and services holding up relatively better. That means a lot of the export-linked sectors, particularly the SMEs involved in this, may be facing more global headwinds. And I think there'll be some backstops, some buffers for these firms amidst uncertainty in the budget as well. And that's really the story of it. Even though in the headline it looks like the budget gets less supportive of the economy, it's going to be a lot more supportive than the headline suggests. And that's the upshot of the budget that's being anticipated.
Now, still staying in the region, Malaysia halted its rate hikes last week and forecast no recession for 2023. Now, is that in line with yours and global investor expectations for Malaysia?
For Malaysia, I think there is a possibility to pull that off, primarily because there is enough fiscal space, albeit shrinking fiscal space, and there's the commodity offset, at least for a good part of the year, to build some buffer. However, we continue to be cognizant of risks in the manufacturing sector, electronics, electricals, things that tend to be pro-cyclical. These could be quite a drag on the economy. And so our bottom line is, even if Malaysia averts a recession, the truth of the matter is growth will slow down, it will be felt, and whatever support there is to avert that recession is going to be pockets of uneven support rather than a broad-based economic soft landing. So there will be parts of the economy that require more support, and a lot of this, exactly how the chips fall, will be partly determined by the budget that's coming out. So it really depends how much subsidies are rationalized for whom, and where that's going to hit. So it continues to be somewhat of a nuanced story. The good news, though, is that some of the political risk premium coming off means that you don't get undue pressures on the ringgit, and the GDP numbers do validate BNM holding off on a rate hike, although a lot of externalities, including the Fed, could start to interfere with that script.
Now, Vishnu, one of the key things that's the markets are looking at is also the new Japanese central bank governor. Now, the Nikkei reported that they would nominate Kazuo Ueda as the new Bank of Japan's governor. what are, as a Japanese bank in particular, obviously we are really interested to hear your views on whether there is an expectation of any policy shifts in Japan.
I think the popular and the tempting narrative here is that bringing in an outsider instead of Deputy Governor Anamia is that you get the stage set for a big shift in policy. But I think that would be a misguided assumption. One is the Deputy Governor turned down the job, and even though you're bringing in an outsider, it doesn't mean that there'll be a big shakeup. What we expect as a baseline are Japan will get out of negative rates policy into a zero rate policy again. So a revert is a tweak, not a tectonic shift to their rate outlook. And bear in mind that the narrative out of, or rather the comments out of the prospective governor is that, policy accommodation ought to be kept in place. He's not doing a complete 180 on this. So there would be tweaks to YCC to alleviate pressures and some of the balance sheet questions around the BOJ, but it would not be a matter of pulling the rug from under the feet of markets either. And let's bear in mind that two big factors that suggest to us that the BOJ need not make a large move. One is we're teetering or at least getting towards the edge of risks associated with the global downturn. So no matter how you are inclined along the hawkish dovish spectrum, any central banker looking at the risks ahead will say this is the worst time to make aggressive rate hike moves heading into a possible downturn. So that's one factor that's going to be a holdback. The second factor that's a holdback is back in October when a lot of these shift in policy talks started heating up, the yen was collapsing. We were talking
Yes.
about dollar yen at 150, 155. Now you've got a sub 130 yen where the BOJ is quite comfortable. So the imminent currency pressures and that kind of very sharp trade-offs involved uh, have now dissipated. And insofar as that stays the case, I think the BOJ will have the luxury to assess slowly and make calibrated tweaks rather than have to resort to brutal responses that involve really very risky trade-offs.
Now, so Vishnu, then I'm going to take a key takeaway as calibrated tweaks. Now, before we end, Vishnu, we've got a calendar that has quite a few moving parts this week. What should we be watching out for key events and data points that could move markets?
I'll stick with Valentine's Day. Whether or not whether or not love is in the air, I think markets will be assessing whether inflation is still up there in the higher altitudes or not. And I think US inflation will be front and center for data watchers per se. I'll come to headline watchers on another account, but that will really be right up there. Our suspicion is that your year-on-year headline numbers that people usually watch will continue to gel with what Fed Powell said about disinflation. However, the sequential pressure starting to build up again will warn many not to get carried away with Fed pivot bets, which means you're not going to sharply sell down the dollar or going to bet against large drops in USD yields. And that also means maybe equities will not be as buoyant, if at all they can avert further softening. Headline watchers will be watching US China, given the number of balloons shot down. So this is really quite diametrically opposed to having love in the air or any kind of sweet nothings about geopolitics. That's not going to happen. In the region around elsewhere, I mean, you've got some headline GDP numbers coming up, but all that will be pushed as backward-looking data with a lot of forward-looking risk in the for markets to watch. India's CPI for the region will be watched quite closely. Bank Indonesia and the Philippine Central Bank are taking rate decisions. We expect Bank Indonesia to stay on hold and the Philippine Central Bank going right the other way with a 50 basis point hike, given that inflation has accelerated in the Philippines. So it's really quite an active week this week, even if we say so ourselves.
Now, Vishnu, as always, thank you very much for coming on the show. Thanks for your insights.
My pleasure. Thank you for having me, Brian.
Now, we've been speaking to Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank on BizTech's Asian Midday Market Watch, powered by Austral Asset Management. I'm Brian Fernandez. This show will be on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.